China's central bank says Fed easing ineffective and dangerous. Quantitative easing by the Federal Reserve and other central banks cannot address fundamental economic problems, but may lead to excessive global liquidity and competitive currency depreciation, China's central bank said on Sunday. The central bank said the Fed's monetary easing was pushing up international commodity prices and asset prices in emerging markets, including China. Quote, "Quantitative easing policy cannot fundamentally address economic problems, and it may cause excessive liquidity on a global scale, as well as risk of competitive currency depreciation," the Chinese central bank said in its 59-page report. It is creating imported inflation and short-term capital inflows, pressuring emerging markets, it said. Sure, the Fed's quantitative easing is dangerous to China if they keep their currency peg and continue propping up the US dollar. However, China has no need to participate in the competitive currency depreciation. When China finally decides to pull the plug on the US dollar and US economy, which is currently on life support, the value of the yuan will go through the roof and the Chinese will buy up all American assets for pennies on the dollar. This economy and inflation, most of our friends still have their heads in the clouds, wasting away their days watching American Idol and Jersey Shore when they should be working to accumulate precious metals and begin their own food storage. Unfortunately, most of our friends won't wake up until the rest of the herd does, and at that time they will likely flock like sheep to $5,000 per ounce gold and $500 per ounce silver.